Hey everybody, welcome back. My next guest is Henry McPhie. He's the CEO of Streamex Corporation, trading on NASDAQ under the symbol STEX. Henry, welcome.
Thank you, James. Pleasure to be here.
Henry, let's start with a quick overview. What does Streamex do?
So StreamX, our main focus is in commodity asset tokenization. And so we are essentially a technology infrastructure firm. The first asset that we're going to be launching is an asset called GLDY. This allows investors essentially to get an up to 4% yield as well as spot price gold exposure. It's a tokenized asset. And so the way that we designed it is as a security. It can be compliantly held within ETFs, with large asset managers, in retail books, and then with accredited investors. And it's something that I think traditionally in the gold market, when you want to buy gold, it costs you money to either store it or to, if you want to buy an ETF, there's the management fees attached. And so if you think about it from the standpoint of a gold investor, you can buy GLDY, or GLD, which is the largest gold ETF, where you're getting spot gold price minus 30 basis points. Or now you can buy GLDY, which is our asset, which is spot gold price plus up to 400 basis points. This is the first asset we're going to be launching. We're excited to be able to bring it out. We're looking at sort of January right now for the launch.
Okay, so then the number of GLDY tokens issued is equivalent in dollar value to a commensurate quantity of gold held by Streamex.
Yeah, correct. And so one GLDY is directly equal to 1 ounce of physical gold bullion. That gold bullion is custodied with Brinks and then leased out through our partners, Monetary Metals, which allows us to provide that yield attached to it. It's a very, very secure process. Monetary Metals has been operating for over a decade now, doing a couple $1 billion in lease volume, and essentially allows us to make your gold active and not just sit there and provide income on top of it.
Okay, so if you purchase a GLDY token, you're not buying a share of Streamex.
No, you are owning the direct physical gold representation. And so it's quite simple. If you say you're an investor and you want to buy $1 million worth of GLDY, we will essentially take that $1 million in USD, purchase physical bullion with that, and then you'll get the GLDY tokens in return that are representative of exactly the amount of physical bullion that you own.
What is the investment thesis to owning shares in Streamex relative to GLDY?
So I think there's a couple things that you should look at as an investor. One is StreamX is the technology company and the infrastructure provider to be able to create this GLDY token. We are able to essentially harvest fees off the GLDY token. And so as we continue to grow the issuance of this token, there's sort of 3 ways that we look at making money off of it. One is on a small initial fee for the tokenization and technology implementation of creating GLDY. Second is on the spread of the yield. And so we pay essentially with Monetary Metals for the insurance, for the different aspects of actually getting the gold out on lease, while also taking a small percentage ourselves. And then also on the secondary trading of the asset. And so every time that the asset trades in the secondary market, we take a small fee attached to that called essentially a transfer tax. And so with that, as we continue to grow the issuance of GLDY, StreamX continues to grow its revenues. And something important to note is GLDY is just the first asset that we're going to be launching. The tokenization engine and infrastructure that we developed over the last 3 years essentially allows us to tokenize anything. We're focused in the commodities space. And so with that, I think there's a ton of different commodities out there that I think can benefit from a structure like this. And so as we continue to scale and grow as a company, we'll be able to launch additional assets and continue to grow our revenues that way.
This constitutes, does it not, a new sort of asset class, real world asset tokens, which are different from stable coins, correct?
I think so, yeah. And so there's a little bit of a nexus of both stable coins and real world assets. And so GLDY itself is technically stablecoin in nature because it's stable to the price of gold, because it's backed by 1 ounce to 1 GLDY. With that also, though, it comes the yield component. So the ability to get an institutional grade yield on top of it, not from any staking and DeFi markets or how traditional yield is generated in the crypto space, but all through the institutional grade yield generation through the leasing. And so I think there's a market sort of developing in the real world asset space where people want to be able to purchase real assets. You don't want to be able to hold them and use all the benefits that blockchain provides, while also being able to create essentially unique structured products. And our focus in the commodity space, and this is all enabled through tokenization. And so I think it's an exciting time for us to be in this space because of how prevalent it's becoming. And I think if you thought about it when we started 3 years ago, there was not as much of a buzz about the whole stablecoin or tokenization real world asset space. And now I think we're really starting to hit that precipice where you're seeing them become major parts of the financial system.
So does the mechanism by which you generate yield through GLDY, does that put the gold that's underlying the token at risk in any way, shape, or form?
No, so it's a good question, and that's something that is obviously very important. And so the answer is no, it does not. The way that we do the leasing is essentially the gold throughout the process stays in the title of StreamX. We do not cede title ever. There is no credit component to the leasing either. It is an operating lease. And so when we actually lease the gold out through Monetary Metals, our partner, the gold itself is RFID tagged throughout the whole process. And so we know exactly where the gold is at any given time. It's 110% collateralized by the lender. So the jewelry manufacturer, most likely, whoever is actually leasing the gold. And on top of that, it's fully insured by tier one insurance providers like Allianz and Lloyd's of London. And so all of those sort of metrics all of those sort of attack points are mitigated. And I think it's something funny that we know people ask us about this all the time. And gold is something that people have been trying to steal for a very long time. And I think we have all the pieces in place to be able to make sure that that does not happen.
So how does an investment in StreamX compare to, for example, an investment in Strategy?
It's a good question. And I think it's something that it's really important for us to note. We are not a treasury company. We are not trying to be a treasury company. Our goal is not to essentially increase MNAV or increase sort of assets while just essentially growing those and not doing anything else. We have a very strong operating model behind the business, and that is what allows us to, one, make revenues and continue to grow as a company, but also, have, I think, a greater multiple than what we would have just on an MNAV basis. We do want to be able to hold a significant amount of gold on our balance sheet, but that is to essentially enable and accelerate our operational model. And so what we do is we use the gold that we hold on our balance sheet to put into GLDY or other assets that we create to, one, seed liquidity, and two, grow the issuance of outstanding assets. And so it's like a flywheel where we're able to actually use our balance sheet to accelerate adoption, and both in the sort of primary issuance and secondary trading of the asset, while also keeping our balance sheet denominated in gold, which I think is something that's important for us. We think gold is going to continue to appreciate and is the best store of value in the world. But that being said, we are not a treasury company.
So you talk about tokenizing other assets. What sort of is the funnel within which you will consider other assets, and what is outside of that funnel from a risk perspective?
That's a great question. And so something that sort of makes a lot of sense when we look at other assets is the natural progression is silver. And so we go from gold as our first asset into silver, which are two large markets. There's the ability with us to create a silver with yield token. And so that's something that I think is going to be quite beneficial, and something that I think investors are really going to like to be able to participate in. From there, if you look at it as well, anything that's used in manufacturing, such as platinum and palladium in the automotive industry, there's also the ability to create a platinum or palladium with yield asset. Looking beyond outside of the spot commodities, we start looking at things like royalties and streams. And so if you think of the name StreamX, that's actually where it came from the royalty and streaming space. And so the ability to tokenize royalties and streams or assets like those, because there's a market there that doesn't really exist in a secondary market trading standpoint, because it's primarily controlled by these large royalty companies like Wheaton or Franco or Cisco. But for the individual investor, there's no way to really get exposure to them other than buying the underlying company stock. And so I think that's something that we're also going to be looking at, and you'll probably see some stuff coming out on that sort of in 2026. Our goal really is focused in the commodities space, and there's obviously a lot of opportunities in that space. It's a massive TAM.
So is the expectation on the part of investors then that StreamX will trade at a premium to some degree to its net asset value of actual commodities in possession?
I think like I said, our goal isn't necessarily to trade at a premium to the assets that we have on balance sheet. Our goal is to trade at a premium to the revenues that we're generating through our operational model. And so there's been a couple research reports published on us, which I think, they do a good job of sort of showing the picture on, hey, with this many assets under administration, so meaning tokens issued, say like GLDY, for example, we're able to make this much off of that through the different fees that we generate. And then you take a multiple on top of those sort of revenue numbers. And I think the growth of that, especially with the secondary trading piece as the fat tail, allows us to scale and grow much quicker than only being valued based off the assets that we have on our balance sheet.
So then to what extent is your yield rate affected by, call it, volatility within the underlying asset? So like, for example, if gold goes up $1,000 a quarter for the next 4 quarters, do you perform better? And conversely, if it was to drop $1,000 in a year, would that negatively impact your rate of yield?
So that's a great question as well. And so with that, something really important to note is all of the metrics in terms of percentage of yield and the actual yield from the leases, they're all denominated in ounces, not in dollars. And so when we think of the yield percentage and we think of the up to 4% that we're headlining, that's not if gold's at 4,000, you're yielding that 4% off the $4,000 number. It's if you have, say, 100 ounces and the 4% is the yield, at the end of the year, you will have 104 ounces. And so regardless of if gold price goes up or down, you will always be increasing ounces. And so our goal is to be able to increase ounces as a company, increase ounces within the GLDY product. And so if gold goes up or down, there's less fluctuation on the USD value side, more on the ounces side. And so we don't expect the value of the yield actually to fluctuate too much with gold price. And we've seen that historically, that it is uncorrelated. And so that's something I think really, really important to know. With that as well, obviously, we do expect gold price to continue to trend up, just given the different macroeconomic features of the world right now. And so I think it's something that we're excited about.
If the gold price is, let's say, frothy and moving, then does that affect your decision-making process in terms of when to onboard actual gold to back the tokens? Or is your token issuance more governed by demand for the token as expressed from your clients?
It's more demanded by value or of demand for the token, not necessarily on price. And so for us, like I said, because we denominate everything in ounces, not in dollars, the way that we've set it up is GLDY is issued through an open-ended fund, so we can take daily contributions into the fund and into GLDY. And so obviously, as gold prices continuing to go up or rise or stay around this $4,000 mark, we've seen a ton of interest in participating in gold and investors looking to get into gold. And with that, that's I think the most important thing to note. It's we want to be able to increase ounces, and it doesn't necessarily depend on the price movement itself. It depends on the demand for the gold underlying as an asset standpoint.
As the CEO of this novel enterprise, this novel sort of yield generation strategy, what is it that keeps you awake at night?
I think there's a couple things. The major things, I've been asked that a couple times, and I think the major thing for us is just being able to grow as quickly as possible, and being able to really get the message out there about, hey, this asset, the one that we've created that has been enabled through tokenization and the technology that we developed, is better than anything else out there on the market.
Henry, we're going to leave it there for now. We'll come back to you in due course. Thanks for your time today.